Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, we learn about Calvin's path from investment banking at Perella Weinberg Partners to corporate development at some of the top technology firms in the world, including DropBox and Twitter. Listen to hear how he broke into investment banking out of Berkley, the big risk he took going into his senior year, and what it's really like working on the inside of one of these tech darlings. We talk about pay, lifestyle, and some great advice for those of you looking to follow in his footsteps. Enjoy. All right, Calvin, welcome to the Wall Street Oasis podcast.
Yeah, thanks for having me, Patrick.
So it'd be great if you could just give the listeners a short summary of your bio.
Yeah, sure thing. So I did my undergrad at UC Berkeley. I had a focus on economics. And yeah, I think, towards my junior, senior year, it seemed like banking was the hot thing to do for people who wanted a career in business. To be perfectly candid, had no idea what banking was, but
like a lot of us.
Yeah, exactly. Right. You grow up and you think, well, banking is kind of you go to a teller, you go to an ATM, but there's a whole other industry kind of behind all of that. Right. So yeah, I decided to invest in banking. I've always been kind of a very finance and numbers oriented guy, at least kind of at a macro level. That always made sense to me. So after college, I worked at Perella Weinberg Partners, which is a boutique bank. There's offices, of course, kind of across the world, but I worked out of San Francisco, focusing on tech M&A. And we covered a pretty broad range of both sectors within tech, as well as kind of types of companies, both from, large, well-known blue chip names to small startups. So I did a couple of years at Perella, worked on a number of different types of transactions. It was a great learning experience, but I never really considered myself a long-term banker. I thought the industry was a great way to ramp up on, certain kind of skills and foundations, but I've always wanted to get to that next layer deeper, right? It's great to advise companies on how they should think about capital raises and M&A, but it's different where you're kind of sitting in the driver's seat and really kind of thinking about that at a more strategic level and being able to make an impact at that level, right? So I knew I wanted to jump to tech and corporate. And luckily for me, obviously within, San Francisco and Bay Area, there's a lot of great tech companies that are, growing quickly, trying to become more inquisitive. I jumped after a couple of years to Twitter. I was on their finance and M&A team for a couple of years, worked on a number of different types of things, including, we made an investment in a music company called SoundCloud, and we worked on a number of different.
SoundCloud's big, right?
Yeah. It's a cool community. Obviously not at the scale of Spotify, but really a lot of unique content on that platform. So very much, fit the cultural vibe over there at Twitter. I was at Twitter for 2 years and then jumped over to DropBox, where I was, an early member of their corporate development team. I think a theme for me was always, I love working at companies where I use the product, right? I am a Twitter user. I've been a DropBox user since college. So I understand the product. I like the product. And that's kind of a recurring theme as I kind of continue on my career journey. But I was at DropBox for 2 years as well, helped them kind of ramp up the M&A efforts there, worked on a couple of acquisitions and partnerships as well. I think, about 2 years ago, I started getting an itch, within tech. There's so much growth and so much disruption going on. And by no means are Twitter and DropBox companies that are, mature and no longer disruptive, but you always kind of want to go earlier stage, always work at a newer platform, somewhere that's a little bit unstructured. So decided to look earlier stage, and fintech has always been an interest of mine, especially on the consumer side. Just a lot of innovation really in that space to be had. And I feel like we're still very much in the early innings of that. So I joined a fintech, consumer fintech called Chime, was their first strategy and corporate development hire. At the time, it was a fairly small company, just 150 people, probably at the stage where they're starting to think about, hiring the first corp dev person. And hey, maybe we should start making more acquisitions. So yeah, I've been here for about a year and a half. It's been a great ride so far. The company is doing, amazing things.
That's so cool, man. Well, very impressive background. I want to start all the way back at Berkeley. So
Yeah.
kind of you started school right after, like as the global financial crisis finally had hit the bottom. And so I'm curious, I would think that people kind of that started college around when you did wouldn't kind of be, putting investment banking at the top of their list. Were you always thinking like finance was for you? I know you said you're good at numbers and all this stuff and you didn't really know what it was in college, like most of us think it's just kind of a good path. I'd love to hear, like, you were an econ major, you probably didn't have like the finance courses, the accounting courses. Tell me a little bit about just like the decision to even apply to these roles and what that whole recruiting process was like. Like, did you have an internship? What was it like?
Yeah, of course. I would say I was a bit of a late bloomer. When I joined college, I wanted to be an engineer, and then after my first semester taking an engineering course, intro to engineering of all courses, I was like, all right, I'm not cut out for engineering, and then I decided to switch to environmental science and policy management. Did a semester of that. Also, did not feel like it really fit my personality either. And econ was kind of like a broad major, right? It's a combination of qualitative and quantitative. It's broadly applicable, right? It's a skill set that you can always leverage in a number of different kind of career paths. So I thought that always made sense. It's a little bit of finance, a little bit of macro, a little bit of qualitative thinking. But I had really no idea, to be honest. I think, midway through college, I had no idea what I wanted to do. Luckily, there's a pretty vibrant business community within Berkeley, right? It's a large school, and one that had a very big presence in terms of business, right? They had an undergraduate business administration program, and even a lot of people who weren't in that program were always thinking about business, particularly, consulting, accounting, finance. So I met a lot of other folks, a lot of my classmates were interested. They had a much more kind of guided opinion about what they want to do with their lives. So I feel like that kind of rubbed off on me, right? I had a chance to kind of learn from them. Like, okay,
Was your family not in finance?
no, they're engineers, which is why I started my career in or my college
Was it just
as an
crazy
engineering major.
competition there? I assume it was like just brilliant people.
Oh yeah, oh yeah. I mean, that's not just true for engineering; it's true for a lot of the majors at Berkeley. But in engineering, I'm like, I knew immediately I'm not cut out for this relative to some of the people that were in my classes, right?
And that's in the
Uh,
intro 101. You
yeah, exactly,
look around here and
exactly.
you're like, these people are on another level.
Yeah,
Very good. So tell me a little bit about just once you kind of came around to you're like, oh, well, econ's interesting. I enjoy the class a little bit more. It has that blend, which kind of suits you well. And then people were like, started telling you about investment banking. How did you hear about it? And did you get that junior summer internship?
yeah. So I think junior is when I first started taking it pretty seriously. I felt like I had a pretty good grasp of what investment banking was. I mean, as much of a grasp as someone who's a college junior could have back then. And obviously, the Wall Street Oasis forums was a great resource for that as well. Because I'm like, wow, there's a lot of people that talk about
I
this.
know you were a troll back then. No, just kidding.
I was a troll for sure, kind of just quietly lurking in the background. But yeah, so a lot of my friends were gonna recruit for consulting and banking, so we definitely prepped together. We did cases together. We read all the different guides. There's a Wall Street Oasis guide, of course, and then mergers and acquisitions, kind of all the standard stuff.
Yep.
I feel like back then it's a little bit easier. I feel like kids nowadays are probably doing internships, before they're even going to college and, during the spring and the fall. But back then it's, you get a summer internship, ideally maybe an unpaid internship in your sophomore year. But then by junior year, you really seriously recruit, right? So my junior year, I landed at a middle market firm called Stiefel. I did a summer there. Uh, it was a great way to just like really understand like, okay, this is actually what investment banking is, right? And I felt like I had a much better grasp of like, yeah, I can do this, and two, I actually do want to do this as my first job out of college, right? It was kind of good soul searching and discovery for myself, and then coming back for my
Was that SF?
yeah, SF based as well.
And then was it tell me what was the recruiting process like? Were there like resume drops on campus and then like you get selected? So tell me about your like numbers. Was it like 20 banks? You dropped it, you got like 10 interviews and like two offers, or how did it come out?
Yeah.
If you remember
So
roughly, I mean roughly.
yeah. So Berkeley is a target school for a lot of banks, especially if you have an SF-based office, right? You can recruit at Berkeley, Stanford, UCLA, USC, typically on the West Coast. So yeah, we had a career center. You can apply online for different banks. They all kind of pop up at the same time. There's probably, there's obviously like the 10, 15 names everybody knows, and there's kind of a longer tail of some middle market, some boutique banks there as well. I obviously drop my resume everywhere because I know it's a numbers game. I probably dropped my resume at 20 different places, got 4 or 5 first round interviews, was fortunate to convert one. I was by no means like crushing it in my junior year.
Wait a second. You got out of the 20, you got 4 to 5 first round interviews. So that means that engineering course might have actually hurt you because the GPA was not like a 3.8.
Yeah, it is. I think that's right. Especially within like the business community, people typically have 3.7, 3.8. That's
right.
I feel
so
like
you had like a 3.3 going into this, or 3.5?
you were pretty close. I was
Yeah.
not a stellar student.
Well, no, I'm just seeing the conversion, right? And I'm like, okay, that means that that means you're probably fighting an uphill battle, right? But
Yeah,
it's good
yeah.
you got those interviews and you were prepped, right? It sounds like. So tell me, how did you convert like from the 4 or 5 first rounds?
Yeah. So my GPA was not stellar. I think my experience was also not light, but definitely not as stacked as some of my classmates. So I knew I had to be aggressive, that I couldn't count on, okay, the bulge brackets are going to get back to me, or these banks are going to get back to me. I had to just apply everywhere and prep really, really hard, right? I did a ton of kind of, interviews with my friends. We would prep each other. We would try to trade questions if we kind of got them from a certain bank, right? Like, okay, this is what I heard from Deutsche Bank, or this is what I heard from Citi.
Yeah, by the way, people can access the company database. If you look at the company database, we have over, I think, 5,000, 10,000, which is a little plug there. I think over 10,000 questions or more now. No, sorry, like 30,000 questions
Yeah,
for like investment banking interviews are in our database. So it's basically unlimited. But it's by company, by position, ton of summer analyst interview questions.
yeah, that's really helpful, man. I think, yeah, I was definitely like lurking in the forums too. And sometimes I'll see some questions from certain banks. I'm like, oh my God, I have no idea how to answer that. Right. And it's kind of back to the drawing board, how you figure that out. But yeah, I mean, like, I didn't do anything special. I think just prep my answers. I knew there's going to be a series of 10 to 20 questions that, I think 80% of interviews are going to ask some combination of those. Right. So really nailing it down. I think the hardest part for me was like answering, okay, why this bank? Or like, why investment banking, and not giving a very generic answer, right? It's easy to say like why Goldman or why Morgan Stanley. It's like, okay, well, these are, premium banks, right? It's easy. You say you can have the best deal experience. You work with the top people.
They're like, why Stifel? And it's a little bit harder. Like,
it's a little bit harder.
Yeah.
Yeah. I still think there's a good answer for that, right? I think there's a level of exposure and that you can get at some of these other banks. You can get a better deal experience. You can work with great people still. There's a lot of very talented people in the industry.
Sometimes you work directly with a VP. And so like there's no associate because they're lean. Yeah, that's
exactly.
true.
Exactly. But it's hard to know that coming in, right? Like,
yeah.
It's just hard to know that.
Cool. Okay. So you're doing all these interviews. You do 4 interviews. You end up with just the Stifel offer, or do you have another offer?
Just a Stifel offer.
Okay. So you're like, yeah, I made it. I got something. So you have that summer internship. And what was that like? Was it heavy hours, like your typical summer analyst position? And then were you able to convert it, or did you have to go into senior year kind of with nothing?
Yeah. So I had a really good summer experience. I was placed into kind of the telecom side of the team, or network technology team, which is the strongest team there, right? They had a lot of deal activity. And I was lucky to get placed there, I think. And yeah, I mean, the hours are tough, but nothing out of the ordinary. I think typically 6 days a week, occasionally get a Sunday off, and then you work from 9 to midnight, typically, sometimes a little bit earlier, sometimes a little bit later. Nothing that I wasn't warned about coming in. It wasn't like 120 hours for the entire summer. But it was a really good experience. I worked on a few projects, and they were also, I think maybe just given the culture of the office, they were very, intern friendly. They try to promote our growth. They try to kind of challenge us and get us excited about the work too, right? They had a little project, end of the summer project for each one of us that we get to present in front of, some MDs and VPs, which was, fun and a little bit scary at first, but, they kind of cared about that, right? They want to make sure that people felt included, even the interns. So I did get a return offer. I did really well in my summer. But I thought, for me, I felt like I had enough of a grasp on the industry that I definitely, when I came back to school, wanted to test the markets a little bit more. Right. I've always, very much believed in my abilities, and not that Stifel wouldn't be a great place to launch my career, but I wanted to see what else was out there. So I came back for full-time recruiting
Did
as
they
a
give
senior.
you an exploding offer, or were you able to kind of shop it a little bit?
It was not an exploding offer, but by the time recruiting kind of started to ramp up for other banks, it had expired.
You had to let it go
I did have to let it go. Yeah.
before you had anything else lined up. Ooh, bold,
Yeah.
bold man.
Yeah. I'm typically not a risky person,
Especially
but
coming out of the financial crisis. We're only like three years removed from like the depth
yeah.
of
Yeah.
that.
I think I was just young and, stupid probably to some
No,
extent. I was
it's not stupid. You believed in yourself.
yeah.
So tell me how that were things kind of looking up. Had you pulled your GPA up a little higher, where you're getting more first rounds on the full time, or were like most of the slots filled by interns and there wasn't much left for full time?
Yeah. I think full-time recruiting is a bit of a different animal than junior or summer recruiting, right? It's especially if you've already done a pretty significant junior year internship, like that's validation from the market. Like, hey, I interned at this bank. They gave me an offer. I got good reviews. The GPA becomes less of a factor at that point, right? GPA for most banks is just an indicator. If you don't know anything about a person and they had limited working experience, it's like, okay, like that's a proxy for how maybe intelligent or hardworking someone is, right? But by the time you've already validated yourself with work experience, like real working experience, that becomes much smaller of a factor. So my GPA was a little bit better by starting my senior year, but still, like no one's gonna like be wowed by it, right?
Right.
But I think it's really that internship that gave me kind of a leg up for full time recruiting. And I think full time recruiting is both harder and easier in a way. It's easier in a way because a lot of people have already accepted full time offers, right? Coming back from their junior internship. So the pool of candidates that are recruiting it's going to be a little bit less competitive, right?
But there's less banks too, right? Looking.
There's also less spots. So that's what makes it harder. So you have to really stand out from the competition.
So what do you think, like in for like summer analyst recruiting, at least back then, would you say they were pulling like 30 or 40 people in for analyst spots, like summer analyst spots, and then the full-time senior year, they're only looking for like 5 to 10, something like that?
Yeah, I think whatever the number of spots you're trying to hire for, probably multiply that by 8 to 10. That's how many first round interviews you probably want to be doing.
Yeah.
Yeah.
It's interesting. So yeah, so your hit rate on actual interviews though for full-time seats, you had good deal experience, you had a good summer,
Yeah.
were you smart enough to indicate on your resume that you had received an offer?
uh,
Or did you think that would look cheesy?
I think I think I did. I actually didn't think it was cheesy because I think that's actually one of the most important things to
Yeah,
highlight,
yeah.
right? That like I did a successful enough job that they wanted me back.
Offer
That's
extended or something like that. Like in the
exactly. And I will, and that's going to be the first thing that they're going to ask you anyways in an interview. It's like, well, did you get a return offer? And you have to be candid about that, right? There's no point in hiding that. So there's no harm in highlighting that fact for sure.
Cool. Okay, so you managed to recruit and tell me about that whole process. So again, you dropped at 20 places or to maybe just 10 this time because there wasn't as many. And what did it look like?
Yeah, so I felt like I was in a decent enough spot. I didn't feel like I had to just get a job anywhere because now that I've had some experience under me, I kind of know what I'm talking about. I can talk about specific project and deal experience. I have a better, more visibility into like what I'm actually trying to get out of my full-time job, right? So I think I probably dropped at 10 places, and this time more focused on, the bulge brackets and a few different boutiques that I held in high regard. And yeah, the hit rate this time was much better. Like I think I got at least a first round everywhere. I
Wow.
converted at least 50% of my first rounds into final rounds.
Nice. And then how many offers did you end up, one or two?
Well, I just got one because I interviewed at Perella fairly early in that process. I got an offer on Friday, had a few more super days the following Monday, and they asked me to take the offer over the weekend. And, that's totally valid. Again, you don't want to lose out on candidates, right? So for me, I really like the team. I thought it was a good firm. I like the lean kind of nature and structure of it.
It's a
So
great firm. Perella is
yeah,
well known.
yeah.
Yeah.
So I thought, it'd be foolish not to say yes. Like, what am I optimizing for here, right? That's just a lot of risk for very little upside. So yeah, I like the team a lot. So I decided to go with them.
Nice. And at this stage, so you're basically signing on the dotted line. They're paying you what, like a $10,000 signing bonus or 15 or something like that. And then what, 75 base, 80 base at that point? I can't even remember.
Yeah, yeah. It got a lot higher as I became a second year. Like, I think the whole industry
They started
flipped.
bumping to like 90 or something, or 87. Yeah.
Yeah, yeah, something like 95 for first years. But I was like, what? 75 for first years when I first started was good. I thought I was like a little bit above market. But yeah, that's the high level of it.
Nice. And so you're there for a good 2 years doing M&A, some strategic transactions, stuff like that. And tell me a little bit about just, you know, how it evolved. Like, did you feel like that internship experience had prepped you well, or was there like a heavy ramp up period because you were an econ major, you didn't have the finance and accounting background? Like, was it really tough the first 5 or 6 months? For me, it was. So I'm just curious for you what it was like.
Yeah. I actually did take some finance and accounting courses
Oh, you did?
at Berkeley. Yeah, I did.
You're more well prepared than I was.
Yeah, but sometimes I feel like most of my foundation was built off of the Wall Street Oasis guides. Like, like how do you even get to what is EBITDA? How do you get unlevered free cash flow? All that stuff. I feel like I learned from the guys and from my friends. But yeah, I would say the internship prepped me well. I think not just of technicals, but also like the expectation, right? That you have to be highly detail oriented, that you have to get things done, right? You have to understand what your role within the team is, right? So I think that all prepped me well. Obviously, the first year of banking especially is a very kind of aggressive ramp up period. Like, there's no amount of internships that could prepare you for a full year of doing that, right? And not just as an intern, but as actually like a very, very critical full-time member of the team. So that was obviously tough, but it's nothing unusual within the industry. Like, it's more so a burden of like being able to manage different expectations, timelines, just getting everything done rather than
how big
the
is the
concept of
temperature? How big is the office out here?
It was, I think, 8 people when I joined. I think today it's like 30. It's
it
it's
was
changed a
pretty
lot.
small.
Yeah.
Wow, it was pretty small back then. Okay.
Yeah.
Yeah, interesting. Is it their Boston office, the main office? They have a Boston
New
office?
York.
New York is okay. Um, cool. Okay, so you're kind of going through your 2 years, crazy heavy ramp up. It's long hours. It's tough as expected, but you're learning probably a ton.
Mm-hmm.
That second year, or when do you start kind of thinking, what I'm gonna go private equity, or at this stage? I remember 2013 is like it was already accelerating, so you were probably already there were probably fellow analysts kind of talking about that. And what was your thought process in terms of where you wanted to go next?
Yeah, it definitely changed. When I first started banking, it was very much I had to do private equity, right? I actually didn't even know why myself. It's just that it seemed like the natural next step, right? It's you're a
Follow
banker,
the
then you go
path, follow Calvin, follow the
exactly.
path.
Exactly. I feel like I didn't truly start thinking for myself until a few years ago, but it just felt like the natural progression. And I definitely
This
interviewed it.
podcast
Yeah.
is actually really the whole point of the WSO podcast is to kind of highlight different paths. And so I
Yeah.
think, it's important to highlight your path too, because so many people are just like, I need to go IB to PE, which it's great. It's an amazing career. It's what I did. Um, but there's like so many other ways to do well and be happy and stuff like that. So yeah, sorry, continue. Just want to
Yeah.
point out.
Yeah. No, I think that's absolutely right. I mean, there's so many things you can do with that foundation, right? Like, I think 10, 20 years ago, maybe PE felt like not the only choice, but the best choice, right? But now there's just so many, like, especially within tech now, it's a very vibrant kind of, industry. There's just a lot of cool jobs you can do beyond just being a PE guy, right? But yeah, I mean, like, at least I very much started with that mentality. Like, I want to do PE. I talked to all the different headhunters. I, interviewed a bunch of different PE shops, and I was never really excited about it, right? Like, I went through the processes. There are these like small offices with like 10 or 20 people. Everyone's in their own office. It's quiet. Like, you could hear a pin drop. And I was excited because I'm like, okay, this is a good opportunity, but I never felt personally excited by it, right? So I think kind of towards the end of my first year, especially beginning of my second year of banking, I started thinking like, what about corporate? Like, I think there's a lot of cool corporate jobs out there, a lot of cool tech companies. I had friends who had transitioned from banking to tech in like finance or corp dev type roles. I would visit them sometimes during like their company's happy hour. Yeah, it's a thing. Like, this happy hours are pretty common within tech prior to COVID. And I would just go, I'm like in my banking outfit, button up shirt with my like banker bag. And I would go and everyone's wearing t-shirts and, there's people riding scooters around the office and there's, whiskey and beer flowing everywhere. I'm like, oh my God, like, what is this world? This felt crazy to me. Like, why would anybody do private equity or whatever when you can, have such a vibrant, happy kind of atmosphere, right? So as I think at that point, I started thinking about it more seriously. Like it'd be really fun to work at like a 2,000, 3,000 person company, building really cool piece of technology that everyone, uses, and not have to work 80 to 90-hour weeks. And yeah, so I started interviewing a lot of different tech companies. And I think
Let's
for
talk
me,
before we
yeah,
jump there. Let's talk a little bit about the PE stuff. Like you did go through some processes. Did you did you make it to like final rounds on any of them? To like what was it like? Any firm do you remember specifically? Was it all West Coast? Like you wanted to stay here, right?
yeah, mostly West Coast. I did
Any growth
have,
equity? Any growth equity shops and stuff?
yeah, I mostly just PE, a couple of growth like Iconic, and then, but mostly like middle market PE shops. I felt like maybe I didn't quite have the pedigree to go, to the mega PE shops, right? Like I don't know. Because again, I'm like, I didn't have that much conviction that I wanted to do PE. So I thought, okay, maybe I'll test the waters a little bit with the middle market shops. I had a number of final rounds. I didn't necessarily close any of them. And I think I probably would have joined if I did, right? I think I'll probably been like, okay, well, this is what I'm supposed to do. I should
That's what I
just
have to
join.
do.
Yeah, exactly. I think looking back now, I would have gone probably harder into growth equity. I think that is the type of investment structure and product that probably fits my skill set and my personality the best. So if I had to do it again, I'd probably look at the top growth shops a little bit more actively. I think PE itself probably wasn't nearly as interesting to me. Probably take a deeper look at the Iconics of the world.
What about VC?
I think it depends, right? VC, there's a broad spectrum depending on stage and focus. I don't see myself as a very early stage person. I think again, it's about your own aptitude and about what type of work you like working on. I like doing financial work. I like doing true due diligence. So it's not about I met these founders and I feel like they could be this could be the next Zuckerberg or the next Elon Musk, but I like actually working with numbers and understanding what the story that the numbers are trying to tell, right? And I think at growth, especially, there's a level of just like opportunity ahead for these companies that's exciting, but at the same time, it's still grounded in technical analysis, which I think would fit the type of work I enjoy doing the most. I think kind of the financial engineering aspect of private equity probably was never that appealing to me. Acquiring assets that,
Get off cash flow, levering up with debt,
right, exactly,
your
like large auto
IRRs.
dealerships, and
Yeah.
turning 3xing that over 5 years. That's not really appealing to me. I'd rather bet on the next, Snapchat or Twitter or Facebook, right? I think that to me was much more appealing.
Okay, so you're kind of coming up through your second year. You get pretty far in some PE, middle market PE shops. Doesn't convert. Do you feel like the headhunters were giving you looks, though they're still giving you chances because you're making it to final rounds, or did you feel like that lack of conviction was hurting you?
Yeah, I was still getting looks. I was still converting pretty well on first rounds, I
That's what I'm
think.
saying. If you're doing that, they probably
Yeah.
keep feeding you because they know you're a place.
Yeah, like I wouldn't embarrass them, right? They
Yeah,
put me in front of a
exactly.
client.
That's a big deal.
It's like, why'd you send me this guy? Like, no, I wasn't. I hopefully was not in that tier.
Yeah, that's fair. Okay, so but this is now kind of coming into year two at Perella, and you're at the stage where you've done a bunch of processes, and you're thinking, okay, what else is there? You're having a good time at all these happy hours, and so how did you go? How did you go about thinking of like, okay, Twitter is a right fit for me, or like, how do you even know? Because like, there's especially in the Bay Area, there's so many of these. Like, why not Facebook? Why not Google? Why not Dropbox initially? Like, you know what I mean?
Yeah, yeah,
Me about how you thought about that because I think that's a tough decision, right? Not knowing what the internal you see all the happy hours and stuff, but like you guys still have to work some, right? So it's like, what is it really like? What's the culture really like? So can you tell me a little bit about that and how you went about it?
yeah. I would say it is hard because I'm not going to say like buy side is homogenous. It's not by any means. Your experience at firm to firm will differ, but at a high level, they all operate in a very similar manner, right? But a tech company is very different. They're just very, very different stages, very, very different types of industries within technology. And even at similar companies within tech, you have two tech companies that look outwardly the same, but their corp dev teams might have a very different mandate, a very different, approach to how they think about M&A and strategy and finance, right? So um, honestly, a lot of it you don't really know until you're in the interview process and you are able to test the other side about how they operate as a team and how they think about the strategy for the company. Um, the other good thing, the other resources, I was lucky. I went to Berkeley. A ton of my classmates and friends were in the Bay Area. A lot of them went into tech, right? So I had a chance to speak with a lot of them. Like, hey, what was your experience at Dropbox? What's your experience
Like
like at Twitter?
engineers there?
Finance, business
Oh, both. Okay.
operations, product, kind of a very broad spectrum. But yeah, like get their thoughts. Like, what is it like working at this company? Like, what do you like about it? What don't you like about it? What would you not expect? But at the end of the day, I think you just have to kind of go through the process yourself a lot of times. You get to speak with the recruiters, get a sense for what the team is looking for, and then think to yourself, like, what is your criteria? Like, why do you want to jump to tech? Like, what types of tech companies are interesting to you? What type of work, do I want to be doing at that company, right? Am I trying to just grind out deals? If you're trying to grind out deals, then yeah, you should join like a Salesforce or Oracle or Cisco that do 20 deals a year. Do you like being a part of like a scrappy early stage team? Then maybe you should be looking at a Series C company, Series D company that's looking for their first or second finance hire, right? So I kind of found myself somewhere in the middle, right?
Yeah.
Like
So,
a company
so
that
Twitter
had,
was kind of in the middle where they weren't raising like a bunch of money anymore, right? Or
yeah, they had just gone public.
they just gone public. Okay. So like that was it. They weren't like doing any more series, whatever, EF,
Yeah.
whatever you call at that stage. Was it profitable at that point or no? Or close?
approaching,
Yeah,
yeah,
approaching.
approaching it.
And so at that point though, like how big was the M&A team within Twitter or proxy? You don't have to give me exact numbers, but just like, is it like 5 people? Is it like 30? Like I have no idea. You know what I mean? So
Yeah.
yeah, and then
Yeah.
how were you thinking of that and like your place in it, like coming out of an investment banking analyst stint? Like where did they place you in the whole hierarchy of that group?
Yeah. The team was about 8 to 10 across like the entire kind of spectrum of M&A, right? From strategy to sourcing, execution, and integration. I, as a second year banking analyst, I came in, kind of at the very junior level, right? Most of the people that they're recruiting, like corp dev teams will never recruit someone out of college. I'm not saying it will never happen, but it's rare. They're looking for people who are coming from banking or coming from other core dev teams, like people who understand how these things work, who have that M&A skill set, right? So I came in, at the very most junior level. My responsibilities primarily were for financial modeling and due diligence, right? Stuff that I was obviously very good at, and worked with more senior team members who are more in charge of the negotiation process, the sourcing process, defining the strategy. And yeah, so working kind of hand in hand with them around that.
Yeah, you were still kind of like almost jumping. It's like a buy side role though, right? So it's a
Yeah.
little bit different because whereas in banking, you're helping manage the process. Like when you're in house, you're now like responsible for like actually looking at it as is it actually a good investment or not trying to sell it, right? So tell me what was that transition like? Like they didn't care about like if your PowerPoint was perfectly aligned or the comma was in a certain thing, but they cared more about like the numbers being right. So tell me, was that like a big transition? Like were your bosses like did they also come from a banking background or were they from somewhere else and they just wanted to know like I guess how did they measure you?
Yeah. 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 So 90% of corp dev people probably have some banking background. Yeah. I think it's starting to become more diversified. In certain cases, having a technical background is actually useful for evaluation of new products and technologies. But for the most part, you're going to see a lot of bankers. And yeah, I would say the work itself is similar at a high level, but also very different. You're absolutely right. Like it's in banking, you're trying to pitch deals. Your goal is just to get a deal done and get a big fee from it, right? So you're going to pitch big ideas. Most of them probably don't make sense. You just want to get it done, right? Because you're not measuring success based off of what the accretion really will be for the company, where the strategic value, you're going to measure it based off of what can I put on a tombstone and how much fees am I going to get from it? I know that's not how all bankers think, but at a high level, it is the strategy of the
You're in
business, right?
sales. You're in sales.
Yeah,
Yeah.
exactly.
Yeah.
But the difference is, and this might be even, yeah, within corp dev and company, I think it's even more different than even the buy side, right? Because in the buy side, you have to make smart, sound investment decisions. But your ultimate goal is just pure financial value accretion. But there might be different criteria and different strategies within a corporate environment. There might be types of deals that you do that you can measure purely on a IR basis, right? Like you
Like it's a
might be,
strategic, like competitive reason. Like even though
yes,
the deal financially is not a great deal, it actually helps. you corner a market or something like that.
Exactly. That, or even like more tactical, like, hey, we
Like
need,
how Facebook goes, like they should antitrust the issues when they acquire Instagram, WhatsApp,
yeah,
whatever. It's like
yeah,
really
exactly.
smart if they get away with it, if they can do it, right? But like then there's concern, right? So
Right. Like it's like, WhatsApp, right? They bought that for $20 billion. Would a growth investor ever invested that at
never.
20 billion? No, they would never. Maybe today. I think everyone could get a $20 billion valuation today, but no, they would not have done that, right? But even like tactically, like we need a specific type of engineering talent that has this background and this area of machine learning. Like we need to acquire into it because it's impossible to hire at that. Or we need a specific piece of technology that would accelerate a particular roadmap by 3 to 6 months or 6 to 12 months, right? Stuff that's like very difficult to measure from a financial model, but has strategic value. So that's like the difference in thinking, right? There's a lot of different types of deals you can do in a corporate environment that have a lot of different types of impact. And you have to be able to kind of think about how do you approach that deal? Like, how do we think about ROI justification? How do we think about integration? It's going to be very, very different for a lot of different types of deals, right? It's not always about buying a smaller business and thinking about the revenue multiple and EBITDA multiple. Like it's
Multiple
you can throw
expansion, like we're gonna buy it at 5x and sell it at 10x, roll it
exactly.
up,
It's
do a roll up for tuck-ins. Yeah,
yeah,
not all about that. There is some of that, I'm sure, because obviously the multiples that whatever Twitter's trading at or Facebook's trading at are especially now insane. So let's come down a little bit. But sorry, one sec. So I guess what was the thought process in terms of like, or what was your trajectory there? So then why move to another corp dev? Why not move up within there? Why jump to a Dropbox? Is it more like wanted to change the scenery? What was the rationale? And when did you kind of start looking and what was that process like?
yeah. Um, I think for me, I I think kind of a recurring theme of my career is that I wanted to do more, right? I think after a couple years at Twitter, maybe like a year and a half into the job, I mean, it's a pretty big team. I thought we had maybe a pretty large team for maybe the amount of M&A activity that we're contemplating. And it felt like maybe I wouldn't get as much exposure as I would if I were to join a leaner team, right? And I think for me, one, Dropbox has always been very high on my list of companies that I kind of respected and held in high regard. And
Did you ever
two,
look at going to Dropbox before? Had you been in a process with them before?
I think I did interview with them when I was in banking for a non-corp dev role, but that was like a long time ago.
Okay.
But yeah, but that's like one of the companies where I went to their office and I was just blown away by
Yeah.
kind of the environment there, right? And a lot of my friends always talked very like fondly about their time at Dropbox as well. Again, it's a lot of it is just about who in your network has worked somewhere and what do they think about that business and where it's heading, right? So
So like at Twitter, it was still a pretty small team, but it was just more like the pace and the amount of deals that were coming through wasn't at it somewhere where you felt like, okay, if I stay here, like there's no real path up. I'm either at this position and go to business school. Do I really want to go to business school? I assume you thought of like MBA, like maybe tell me about that whole thought process. Like, oh man, I don't want to go to spend $300,000 on an MBA. Oh,
yeah, it's funny because I was actually debating between going to Dropbox and going to business school. I had been accepted at a business school. I was considering going to Kellogg at Northwestern. But then I was thinking like, oh my God, like what am I going to business school for? Like I kind of know what I want to do. Like I mean, I'm surely it would have been a great experience, but does the opportunity cost really make sense here? Right. So I started panicking actually about like having to go to business school around April. I'm like, oh my God, I guess I have to go in 2 months. And then I got reached out to actually by a headhunter, which is actually very rare. Most tech companies do not use headhunters to source roles, even for things like corp dev. So they reached out to me. It's a headhunting firm that I had worked with before. And they said, look, Dropbox is looking for their second corp dev hire. And at that time, Twitter, especially like the company wasn't super acquisitive at that time. They're going through some restructuring. We had a pretty large corp dev team. So I thought, this is actually what I'm looking for, like more responsibility, a leaner team at a company that I really, really liked and admired. And I think it would be a great kind of growth opportunity for me there, right? It
how
could
did you
be,
get comfortable that they were going to be acquisitive enough, even as number two, there?
Yeah. I think one, just the fact that they had two people meant like even if they had 50% of the volume that Twitter had, like
Yeah,
I would be seeing
you're still
two to three
drowning.
X more work, right? Uh,
Fair, fair.
yeah. And especially at that time, Dropbox was like in a really strong position, like growing really quickly, had a very lucrative and profitable business from a cash flow perspective, was probably going to go public soon, and was a brand that people knew in tech, right? So
Is there ever a business, a tech business like that is profitable before they go public? I mean, I know Facebook was because they waited so long and stuff like that, but the majority of them are losing money, right? Like when they go public and they're like,
yeah,
their revenue is like this, but their earnings are like this.
yeah.
Tell me about that. Like, was there ever like some sort of unicorn out there? Was Dropbox closer to it where like you saw really crazy growth, but like it wasn't so, I mean, I don't know, probably wasn't positive earnings because they're probably dumping so much into growth. But tell me a little bit how you think about that as like somebody who comes from a banking background, maybe a little more conservative and maybe out that the company's not making any money.
Yeah, I've been in like the SF bubble for so long. I always like kind of wonder like how do people outside of technology perceive what we're doing here, right? Because like oh this company is like worth $40 billion. They're not nearly close to
They're
profitable.
losing 200 million a year, yeah, or whatever. Yeah.
Exactly, right. It could even be billions, right? Like I've always wondered about that, and I think you just have to have a different mindset. It's really about you have to look very far out, right? What is the potential of this company in 5 or 10 years, right? And can they capture outsized market share? Can they actually leverage technology to do that? And if they can, then what is the true earnings potential of that company, right? It's probably huge if you kind of pick the right company. For me, Dropbox wasn't that risky. Like they had already kind of built a very powerful business model, right? Very efficient with its SaaS. Did not lean on sales and marketing for growth as much as their peers. Um,
The amazing
and
referral network. I've read about that. The way they did
exactly,
it.
exactly.
You get more space if you invite your friend. Like really smart.
Yeah, yeah, brilliant. I mean, they had more users than pretty much every social network outside of Facebook, right? Which is crazy in the SaaS world. It's very much like a consumer business within kind of a SaaS ecosystem, which is was appealing. So yeah, so I didn't think it was a risky move at all, and it was going to be a step up for me in terms of responsibility. I thought it made a lot of sense.
That makes a ton of sense. Yeah, I mean, yeah, it makes a ton of sense. Tell me a little bit about how you think about joining a tech company like this, like pre-IPO. Was Twitter pre-IPO before you went, and was that like a big carrot where they're like, "Hey, we're going to give you options, and we're going public in a year"? Like, how did they communicate that to you, and how much value should you give that? Because I've had friends out here who was like working at some large firms, and they're like, "Yeah, we're gonna go public," and it's like 3 years later, right? And they
Yeah,
expect it. So tell me how you should discount those options and think about that a little bit.
yeah. So I mean, I joined Twitter right after IPO, and I joined Dropbox right before IPO. So very much like it was kind of a sure thing. Like nothing's a sure thing, but it was as close to a sure thing as you can have. So I wasn't going to get crazy upside.
And WeWork showed nothing's a sure thing. Yeah.
That's true. That's true. That's fair. Yeah. There's always going to be a WeWork out there. Yeah. But for me, like it wasn't a gamble really. Like I was not given a package I was going to have 10x upside, but I was also going to have very minimal downside, right? So I didn't have to overthink that too much. It was pretty much equivalent to an offer package if I were joining a public company. Obviously, a little bit more upside, maybe a little bit more risk, but kind of within those bounds. But it's more difficult, like the
Can we
more
can we
early
talk
stage you go
about
to.
can we
Yeah,
talk about pay? Just kind of going through. So you're probably making like what 130 your first year out of school at Perella.
yeah.
I don't know, 150 maybe. I don't know. They pay pretty well, I think, but maybe a little bit more, 150, 160 max. And then second year, I assume they didn't dock you. Did you tell them you were leaving before to Twitter before you got your bonus? Or it was like bonus hit
Uh,
and you're like, bye.
yeah, I did let them know. I told them like in April, and bonuses came in June. But I had a good relationship with them. Like they're like, okay, well, this is the earliest day you can leave and still get your kind of full bonus.
Yeah.
And I essentially quit that day and started the week after, right at
Yeah.
Twitter.
You didn't have a break, unfortunately. But okay, so
No,
and then tell me about like pay going to M&A because oftentimes it can be a pretty big pay cut, right? Going from like the finance world to in-house. Was it a big like I assume the base was somewhere like around 100, but was bonus like gone and it was just all in options at this point, or was it like How should we think about that? And you can give a range. It doesn't have to be like this is what I got paid. Yeah.
Yeah, of course. So you're right. I think salary typically within corporate and banking, especially at the more junior levels, are going to be pretty comparable, right? So if you're 2 years out of banking, you're probably looking at 100, maybe upwards of 120 base. Some companies have a cash bonus program. It's never going to be like anything near what a banking bonus would be. Maybe 10 to 15% of your salary would be an annual bonus and contingent on performance. And then the last component would be, stock, right? And then the way they do it is it's a 4-year grant. You get the full first year grant after your first year. And then every quarter after that, you vest another, 1/16, right? So, yeah. So, I mean, again,
And how much, yeah, like how do you even value that? I mean, I know they give you a strike price or something,
yeah,
right? On those options.
So,
then, like, yeah, how do I?
Yeah, so public companies and even companies that are approaching public will typically not grant stock options anymore. It will be RSUs. So it's like a stock option, but with a $0 strike price.
Even
so
better.
It's essentially just a share, right?
Yeah.
So you can value that at face value. Like it's pretty straightforward. It's like we're going to give you 1,000 shares a year at today's value. That might be $20,000 or $40,000 a year. Obviously, there's opportunity during the 4-year vesting schedule for stock price to appreciate. Obviously, there's also potential, decreases and downside. So you have to make your own judgment call. Like you have to understand what is it worth today, and what do I think the company could go in the next few years, right? Could this be a company that could 5x? Yeah.
Yeah. And yeah. So obviously, yeah, there's more variability up and down there, but you can think of it as like you're still getting a pretty good base. And the stock grant 2 years after banking isn't going to be at least on day one, it's not going to be like $100,000 face value right that day. It's going to be probably closer to 20 to 50,000 ish in terms of, but like with the potential to double or triple and then become that. Um, Interesting. Okay. So yeah, you'd say that's pretty typical for that type of role, kind of a junior corp dev role coming out of banking.
Yeah, I would say so. A couple years out of banking, you're not going to be like
So it's a
present
pay
value.
cut.
It's not.
So
It's a pay cut. Yeah,
it's a pay cut, but it's not a massive pay cut when
it's
you
not.
factor in
It's
everything.
not.
Yeah.
I guess the comparison would be like compared to your second year banking analyst comp. Yeah, maybe like a slight pay cut. But then compared to, hey, I'm going to make associate next year, then that's going to be a bigger pay cut, right? That's really the consideration you should be weighing against. Like, what is
about
the
hourly
opportunity
rate?
cost?
What about hourly rate?
Oh, you're crushing it. You're crushing it.
It's a pay raise.
Oh yeah, you're crushing it for sure. Depending on what bank you worked at.
You're making 20% more per hour, but you're making
Yeah.
20% less.
And unlimited vacation days, man. Like it's there's a lot of perks for sure.
Yeah. Does anybody take that? Like more than 2 weeks a year?
Studies have shown that companies that offer unlimited, their employees take less. Yeah,
right.
They'll take less. Yeah.
Well, maybe I should do that. Yeah. No. So like we're okay. So we're here. You're here at DropBox. It's great. You've wanted to be here. It's fast growing. It's exciting. And this was pre-IPO.
Yeah, about a year before they went public, or about 9 months.
Tell me what it's like being in the corp dev team of a pre-IPO company. Was it exciting? Was it whatever? This is taking care of us. Somebody else is dealing with this. Did they have you deal with the bankers at all, or was it a direct list, or was it no bankers?
I was not a part of the IPO process. That was another team that did that. Yeah, pre-IPO, actually, like DropBox was pretty acquisitive pre-IPO. That's one of the things that gave me conviction. Like, I want to go here. Like, they had done a ton of deals for like the 3 or 4 years prior. A lot of them were small, like not like huge transformative deals,
like
but
10
like
to
they
50
were
million, 100 million, something like that. 10 to.
I don't know the exact figures, but yeah, nothing big. It would be like the companies that they were acquiring were probably like 5 people to like 30 people. So it's not like a gigantic, company acquisitions. They're just like a high velocity, smaller deal type environment. And I think what they wanted to do with my hire and the director of corp dev that they brought in before me was like, okay, let's start thinking larger, right? Like, it's great to hire like small teams or like acquire small teams and acquire small companies, but what is really going to move the needle here, right? And that's going to be an evolution of like how every company is going to be. Like pre-IPO, you probably don't really need a corp dev person that much until you reach a certain stage, but then you might be focusing a lot of your time on talent-based acquisitions or small technology acquisitions. And then once you start raising bigger rounds, and once the value of your private stock is like approximately the value of your public stock, like people actually value that as a currency, you can start looking more strategically at larger deals, right? Like actually acquiring new businesses, new revenue streams. Very much before, it's much more tactical about, filling up talent gaps or technology gaps, which will still be a part of the focus, but you're going to be able to do more and do bigger, like the more later stage you are.
Great. So like, yeah, you were with them through the IPO, and then yeah, tell me a little bit about your. It sounds like it's like I'm looking at your LinkedIn. It's like 2 years, 2 years, 2 years, 2 years. Right?
Yeah.
It's very like. So is there a 2 year thing here where it's like it's time to move after a year and a half? You start thinking, okay, what's my next stage? Or like, I know it's very normal.
Yeah.
That was
It's
similar.
funny because for my first three jobs, I pretty much stayed at every single one of them 2 years to the dot, like exactly 24 months. That was not intentional. It just kind of happened to work out that way. And that's not really like the approach I'm taking to my career. Like I'm not going to just stop somewhere for 2 years. It's not like a private equity, like 2 years stint and I get kicked out or anything, but it just kind of happened that way. But yeah, Dropbox was great. Like it's a company that had gone through a lot of change in the 2 years that I was there. My team had done kind of the first big deal that they had done, like an actual new business line. We acquired a company called HelloSign, which is a DocuSign competitor.
Okay.
Kind of in 2019, early parts of 2019, which is great. It was a really fun deal process. It's always really fun helping a company do its first kind of like big deal, because a lot of folks within the company they don't really know what to expect, right? And it's kind of fun going through that process for the first time. It might be a little bit more difficult, but it's a new fresh challenge.
Interesting. I was just looking up Dropbox stock. So you're, but just out of
Yeah.
curiosity, and yeah, you haven't missed much upside. Put it that way.
No, I have not.
No,
I would say I
you've missed
didn't
no
quite
upside.
strike out my first two companies, but I definitely did not do like I'm not questioning it from those stock rants at
Well, I
all.
mean, Twitter was such a big name too. I mean, it's almost impossible
Yeah.
for it not to be overvalued because it's such a, especially consumer wise. I feel like these stocks, well, Twitter's now done well recently, but for a long time it languished.
Yeah, I was part of that languishing. Like, I think I
Yeah.
was there for the 2 years where they were languishing the most. I think at one point it was at like $14 a share, and
Yeah, yeah, yeah.
when I joined, it was at 50. It was 50. So I had my share price cut by almost three quarters, right? But it is what it is. That's the variability that you have in tech, right? Like you can join a Zoom that grows 100x in like a year and a half, and sometimes you'll join a WeWork that goes the opposite direction and within a year as well. That's kind of the fun and the challenge of working in this industry.
It's really interesting. So, yeah, in terms of the year, I know you didn't plan it out for a 2 year, like you said, but um, when did you, was the team bigger by the time you left Dropbox? Was it like 4 or 5 people then in Corp Dev or
Just two.
just two
Yeah,
still? Okay. So it was
just
more
two.
like, hey, I'm looking for a new challenge, that type of thing. It had been public for a while and you were like, hey, I want to go earlier stage. Was that the thought?
Yeah, new challenge, earlier stage. I think also I was looking for like a more diverse role, right? I think at Dropbox, Corp Dev was very much
Just
you're
Corp
an
Dev.
M&A person. It's yeah, exactly, right? You meet some companies, you execute deals, and that's fine. But we weren't also like an M&A machine, right? We weren't doing like 6, 7 deals a year that would really occupy you just focusing on that one specific role. I wanted to kind of expand my skill sets a little bit. Like I like doing corp dev, I like doing M&A, but is there other types of projects I can work on? Can I do fundraising for the company? Can I
So
do
yeah,
strategic planning? Yeah.
just tell me about strategy a little bit and like what that's like. Does that just mean you're like with the CEO at certain meetings and you're discussing like I don't know. Tell me what that means at a fast growing startup.
Yeah, I would say strategy is a very nebulous kind of title. It could take on a lot of different forms at different companies. And even within a company, there's going to be different strategy teams who are focused on different things, right? So I think at a high level, there's kind of two different elements of strategy, like at tech companies. When you hear like biz ops and strategy or strategies, usually you're helping kind of implement a process or execute on like a project, right? Like you're helping get a product to market, or you're helping
Like a PM or
improve internal
whatever.
processes. Yeah, exactly. Like you're helping the product team and engineering team to pushing thing along. You're like trying to drive initiatives. That's to me more of an operational type of strategy. And then there's kind of more corporate level strategy, like zooming out, thinking very macro level, like what is the vision of the company? Like what is our place within this industry? What do we need to look like in 3 years to be an industry leader? How should we plan against that? How should we think about um, our company kind of structure and narrative? And how do we engage investors and be able to relay that story to them in a very productive manner, right? So that's more the role that I'm taking on in my current role, which is kind of more macro focused, more industry
It's a little
level
investor.
focused.
It's a little investor relationsy,
It can be, yeah, it can be,
because you're well, at least for fundraising, right? For
yeah.
on that side, I guess it's not really IR in the sense of like you're public or anything like that. So yeah, how did you get comfortable? I guess we don't have to talk about that. I guess just in terms of you've been really forthcoming sharing all your entire path, which is really impressive. Is there anything kind of looking back, any final kind of words of wisdom looking back at your whole run? I know you've had a couple, like you've been at some great companies, and the transition from private to public didn't make you able to retire at 20, or I don't know how old you are, but like super young, but it's been a great career so far for you. So tell me like a little bit about just what you'd suggest to people who might be interested in following your path.
Yeah, I would say these are roles that really like you can make what you want out of it, right? There's just so much opportunity to learn, right? Don't think of the corporate development position as I'm an M&A guy, I'm going to make financial models, I'm going to execute deals. To be really, really good at your job, you have to spend a lot of time with folks within the company. You have to spend time understanding the product, understanding the technical architecture, understanding what is our go-to-market strategy, our marketing hooks, even understanding things like you working with the HR and people team and like figuring out how compensation and structuring and stuff like that and like benefits work, right? So it's an opportunity for you to absorb a lot from all aspects of the business. And so you should go into it like very wide-eyed, very receptive, just be a sponge, right? And to be good at your job, it's not to just be good at finance, you have to be good at everything. And I would have encouraged my earlier self to do that, right? I thought, okay, I'm gonna come in, I know how to model, I can kick ass. That's not enough to do the job well. And it's not enough for you to continue to rise in your career. And especially in the corporate world, is very much kind of like you can rise up as quickly as you can, as you want, if you're good enough. There's really no ceiling to how high and how quickly you can go, right? I think probably, PE, I think, for example, is hyperstructured. Banking is hyperstructured. I think in VCs, you see people who are 28, 29 make partner. That's possible in like tech too. Like if you're super, super good and you can buy credibility because you are able to provide value for the company, there's no ceiling, right? So just be aggressive, be earnest.
What would
Try to
that
go
look? What
in.
would
Yeah.
that look like for you? Like CFO role at a fast growing company? Like what is that? What's the standard like from corp dev? Don't a lot of them go CFO eventually, or no?
To be honest, I think like most corp dev people just end up
They
keep
corp
doing
dev.
corp dev.
Yeah,
Some people do like chief strategy roles or CFO roles. I think if you're a CFO, probably more of a strategy oriented CFO rather than being like a technical accounting finance based CFO. Not that corp dev people don't have that foundation, but it's just like there's a different type of archetype, right, for different types of CFOs. But yeah, I think CFOs are a possibility, but most people just end up being like a VP of corp dev or
got it.
head of corp dev type of role.
Got it. Fair. Well, listen, Calvin, thanks so much for taking the time and sharing your story
Yep.
with all the monkeys.
Thanks for having me, Patrick. This was fun.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.